day. Thanks for joining me today for the latest weekly market insight series directly from the capital markets trading desk at SunWest Mortgage Company. Let's get right to it. Markets are riding high this week. Soft inflation data provided hope that the Federal Reserve may be able to cut its lending rate this year, while investors were not deterred by the central bank reducing rate cut expectations. Treasuries gained this past week after fresh data showed lingering inflation. All three major indexes closed higher on Monday. As expected, the Federal Reserve kept its benchmark lending rate at its current level for the seventh time in a row. In its statement, the committee acknowledged that modest progress had been made toward their 2% target, but stuck to the higher for longer theme. Policymakers indicated that the committee would like to see a steady stream of data that shows decreasing inflation. The Fed now projects one rate cut this year compared to the 3 rate cuts forecast in March. It also added one expected rate cut for next year, raising the 2025 forecast to 4 rate cuts. According to the Bureau of Labor Statistics, the Consumer Price Index was unchanged in the month of May, down from April's 0.3% gain. CPI increased 3.3% on a yearly basis, slowing from April's 3.4% rate. Core CPI, which excludes volatile food and energy costs, rose 3.4% in May over the last 12 months after rising 3.6% in April. All figures were lower than economists' forecasts. Price increases were held in check by a 2% drop in the energy index and just a 0.1% increase in food. Thursday brought more good news on the inflation front as producer prices unexpectedly fell in May. Driven by a sharp decline in energy costs, the producer price index was down 0.2% monthly, beating expectations for a small increase. On an annual basis, the rate fell to 2.2%, down from 2.3% in April and below the 2.5% forecast. Core PPI was unchanged, beating expectations of a 0.3% increase. The NFIB Small Business Optimism Index reached its highest reading of the year as it beat expectations and rose by 0.8 points to 90.5 for the month of May. The gain in small business optimism is only the second this year, and it marks the 29th month below the historical average of 98. 22% of owners reported that inflation was their single most important problem in operating their business, unchanged from April, and the top business problem among owners. This percentage remained unchanged from the previous month. MBA mortgage applications bounced back from recent losses. Mortgage applications increased by 15.6% in the week ending June 7th. Refinances were up 28% from the previous week and were also up by 28% when compared to the same week last year. Purchases increased for the first time since May 3rd after gaining 9% from the week before and were up 19% year to year. Mortgage rates had been trending lower throughout the week until a strong employment report led to a spike on Friday. Initial claims for U.S. unemployment benefits for the week ending June 8th jumped to the highest level since August 2023. Jobless claims rose by 13,000 to 242,000, a significant increase from the expected 225,000. Continuing jobless claims increased by 30,000 to 1.82 million for the week ending June 1st, reaching its highest level since January 20th. Even though this week's numbers seems relatively high, it's still within the range that reflects a healthy labor market. And that's it for this week. If you like this video, please hit that like button. Join me on Fridays here to stay updated with the world news, and I'll share with you all the latest information about our pricing incentives, courtesy of our trading desk. Stay locked in here and never miss out. Have an awesome weekend, everybody. Buffy, out.